Good morning. This morning, I want to talk briefly about the efficient market theory and how that's currently wrong, and what our current environment and where we're going in those decisions, what that's based on, and maybe some things about that you should understand at this point that is already true, that is not generally necessarily accepted by those that have a different view on how things work. And so I'm going to get right into this. The efficient money theory, can't see the whole thing, is basically a view that all available information is priced into stocks. Share prices reflect all information. And the biggest evidence against that is the fact that when something happens, the stock and market drops and then generally recovers some the next day. And if that was true, it would just drop to a point and stop and just level out, because no more information is generally available the second day than was the first day for a lot of these drops. And so you ask yourself, well, why does it then drop and come back up? Well, you've got several things going on, but they amount to beliefs and emotions. People sell when people sell. People run when people run. There's a herd mentality. And if you kind of understand when the market's here, the information, the destination is not a straight line down, it's not a straight line up, but it has these large ridges, and you can take advantage of those ridges, of the emotion of those things in the situation. And so let me jump right into the next piece I want to show you, which is inflation. What is inflation? You all know what inflation is. Inflation is the amount of money in the current supply. Okay? It's not the price of your groceries. It's not the price of your gas. It's not the price of those things. That is how they track the effect of inflation. Okay, but inflation is actually the amount. So if we look at this graph, we can tell exactly what inflation is doing. Now, many times there is a delayed reaction from inflation occurring, and that delayed reaction is because the actual price of things is based more on belief in the short term and on emotion than it is on the actual facts of the situation. So if we look back here for 5 years, we can look and we can understand that in the beginning of 2020, inflation shot way up and continued to increase. Okay? Now, no prices necessarily changed right here, and the house prices didn't change right here. They were delayed by 6 months because they are triggered by belief and by emotions a lot of times. And the reason I say that is because if a person has a belief that is wrong, for instance, if they believe that inflation is that price of that house, then they wait for the price of the house to increase in order to say we have inflation. Okay? And that is more of a belief-based inflation measurement on the reaction rather than the actual inflation itself. So if you look at here, the money supply went down some in June, down in February. March, it is back up some. And a lot of that up is from government spending. So think the government is going to tell you that they are creating inflation. Hey, I'm Joe Biden and I create inflation. No, I'm not going to tell you that. He's going to say it's corporations and that kind of junk. But in actuality, corporations do not create money. People can't create money. Only governments can create money. Now, the prices may fluctuate, and so if you're looking at the results of a situation, yeah, there could be changes, but that's not what inflation is. That is just prices of things. And so we see this go back up here, and so when this goes back up, we should expect prices to rise. Now, if you go back 5 years and you say, what was the amount of inflation that we had from 2020 to now? Maybe you're talking 75%. Well, our price is up 75%. Not yet. So therefore, they still have to have an effect in the market. The prices still have to rise. If you have a 60% increase in inflation, and then you have a 10% increase in prices, you've got another 50 to come, minus whatever you can do to mitigate the circumstances, right? But you create the inflation here, you see the effects later. Now, how can we take advantage of that? So, we have the efficient market theory. We understand the emotions and beliefs. Well, everyone believes inflation is something different than it is. That's an advantage that you have in making decisions. You know true things when they look at falsehoods and perceptions. Now, let's go back here and look at some specific information we have. Okay. Powell says the Fed will not hesitate to keep raising rates until inflation comes down. Okay. So he says, I will not hesitate to increase it to what neutral inflation is. Okay, so neutral interest rate. He calls that 2.4%. In actuality, whenever you can borrow money cheaper than inflation, that is not a neutral rate. So if I can borrow money at 5% today and inflation rate is 10, I'm making 5 on the money. You guys have seen that in other videos. I'm making 5 on the money. No doubt. Plus, whatever I do with the money, I could make money also. So the neutral interest rate is closer to the increase or the amount of inflation that you have. So let's say that's closer to 8.5%. Well, the neutral interest rate is closer to 8.5% net. Right now, commercial rates are at 5%. And so there's another 3.5% that they have to go up to hit neutral. Neutral effect on the effect of the economy is a different thing, but as we know, the inflation is right here. They've actually inflated the money a little bit, but they took it down at the beginning of 22. So I don't know what they're doing. I think they're just trying to suck money out of corporate sectors and things and use it for government spending to further their social agenda. That's kind of the situation. That's what they're trying to do. So, the best thing to do as an investor is try to escape their subtle taxes. Inflation's a tax. Interest rates, that they establish could be a tax. So let's look at some corporations and what's happening with them. This one I don't like. Let's look at Coke. Okay? Advantages for Coke. In some circumstances, Coke can increase its price with inflation. It does have a pseudo-monopoly on some of its products. Other products it doesn't. So over time, it could increase, price of Coke and things like that because people are going to keep drinking it. And that makes it somewhat inflation protected. Also, it has a yield of 2.89, which people love things that actually have substance to them in this situation, and Coke's one of those. Now, one that Buffett just bought was Citi. Citi's paying a 4.1% dividend. Also has a very low price to earnings ratio. So if we flip back to this chart and you look at Citi, printable reduction is probably small risk because it's already priced really cheaply. You've got the inflation that's going to hit whatever you have with 10%, and you've got the 4.5% interest rate or dividend that it's paying. So you're probably looking at over here maybe a 5.5% loss versus, or tax, okay? Inflation is a tax versus 10% in cash. Or, USDC, maybe a 6%. So similar to what I'm looking at doing, we're doing, Warren Buffett put cash into there to basically somewhat protect it from the surety of inflation risk, that tax that the government creates. Now here's one stock I'd like to buy at some point, which is Pepsi. It's down off its high. But if you look at a 5-year graph that gives you more perspective, back here in 2020 dip, it was this low. Here it's up here. VIG is in index appreciation ETF. I do buy that, especially I buy that when the situation occurs where I know the market is low, but I don't know if an individual stock will come back. If it's a really, really, really bad situation, a lot of times I will bet that the index will come back when I don't know of an individual stock, how it's going to recover. And so that's how this is done. It just tracks the market. Tesla is an interesting stock. Now, a bet on Tesla is a bet on Musk. Not politically, but that he will be able to run this company successfully, achieve his objectives while the political things are going on. And so, that's what you're looking at here right now. Tesla is low, and, Musk creating a lot of noise, so the price is low. If this is something you believe in, it's not really a bad price necessarily. I think that there will be a blip in the next 9 months when people start to realize that the neutral interest rate means the commercial rate is going to be 10.5%, and they say, oh no, everything's going to drop, and there will be, I think, a blip when they believe that. But just like inflation, that took 9 months after inflation started to occur for them to stop saying this is temporary and start saying, oh, we have inflation, we need to do something. So I think when that blip occurs, that will be a good opportunity to deploy, a portion of your cash, not just in a dip, but in a really down market, if you know what to look for, if you're ready to buy at the point. Home Depot is a stock that I have, and over a year, it's doing basically the same thing other retail stocks are doing. It does pay 2.65% dividend, and they just announced a $1.90 dividend per share. So I think they're doing okay over the short term. Long term, they're doing great. Short term, they're going to have some of the same things everybody else is going to have. Walmart stock similar. They thought, up here, they're thinking, oh, Walmart, discount retail is recession proof. But I guarantee Walmart does not have a monopoly. They were not able to raise prices with inflation yet, and so they took a hit on the other effects of inflation, which is cost of people and some things like that. And that's now reflected in the stock down at 120. But again, if you're buying a dip, that's a dip. If you're dollar cost averaging like I am, don't stop. If you're waiting for a crash, the market will do it in the next 9 months, at least for a day. So be ready for that. Have your money ready. Deere stock is another company I watch. Yield 1.34%. Pretty low dividend. But, if you look up here, April, it's almost 450. Now it's down at 313. And so you kind of have to ask yourself, in that price, efficient market theory has occurred, but there's also a lot of belief and a lot of emotion in that price. And so those are two things that you can do better on than other people and take advantage of efficient market theory if you can control your emotion, understand when emotional decisions have been made by the market, and then take advantage of those in the short term. Last stock is McDonald's, and I bring this one up. McDonald's has a dip, it comes back up, it comes down with the market. Question I would have is where is the Russian one's 800 McDonald's being shut down? Where is that reflected in the price? There's 37,000 McDonald's restaurants, 800 in Russia, so 2%. But again, when those are shut down, when those affect earnings, which they will somewhat, right? Even if it's 2%, it could bump them below their targets. When that happens, there will be emotion in that sell decision that you might be able to take advantage of. If you understand at this point, you say, okay, it's worth, 230. I would buy it at 210 or whatever. So then when it drops to 205, you're like, oh, that's my buy price. I'm good with getting in. I'm good with the dividend. I'm good with the price to earnings at that price. And then you can make a decision to buy when someone else is now reacting emotionally and just trying to get out because it's creating stress and things for them. And so that's some perspective on some stocks, someone I'm thinking about. Most likely, I'll continue to dollar cost average into Walmart stock. I will probably maybe buy Citigroup. We'll see. And then I will pick out maybe one stock like Pepsi that I'm going to watch that and VIG, and when that big crash occurs, when people realize, hey, interest rates are going a lot higher than we thought, then I can buy those stocks knowing prior what I thought a good value for that piece of that company was. Like and subscribe to the video if you will, and give me some comments. Tell me what you've done, maybe what your percentages are, compared to what I've explained before. And it's good talking to you. Have a great day.